thinking of retiring in another country, I don't blame you. There are tons of very attractive reasons to do exactly that. But what happens to your public pension plans if you do it? In Canada, we have two primary public pension plans: Canada Pension Plan, or QPP, Quebec Pension Plan if you live in Quebec, and Old Age Security, OAS, which also includes Guaranteed Income Supplement, or GIS. Now, I've done a serious deep dive video on these plans, so I'm not going to get into the weeds with them here, but I will say this: they are two fundamentally different animals, and so they're treated differently. An easy way to think about these is that CPP is actually a pension, while OAS is simply a social program. Assuming you've worked, you and your employer, or just you if you are your own employer, have been putting money into CPP for years and years and years. And so there's actually quite a bit of money there, and you are entitled to your sliver of it. It's yours. It's your money, literally. OAS, on the other hand, is a social program meant to ensure that most Canadians 65 or older, whether they paid taxes or not, can expect to have a minimum amount of income coming in. Has nothing to do with contributions. The only qualifier is that you have lived in Canada long enough to have earned your entitlement to it. But there is no pot of money with OAS. There's nothing. It is funded each and every year by current tax dollars and or our printing machines. So because they are fundamentally different in those ways, our entitlement to them is also different, especially if we leave the country. Let's start with CPP because that's the easy one. Remember, you have put money into the CPP directly, so it's yours, literally. So it goes with you wherever you go, literally. You're entitled to it, it's your pension, full stop. And this goes for the CPP survivor benefit and the child benefit as well. They go with you. And the amount that you would be entitled to if you were living here is the same amount that you would get no matter where you move to. The amount that you get is not at all affected by where you live. The only real implication to CPP if you leave is how it's taxed, but that's the same case for OAS, so we'll just cover both of those together in a little bit. Now on to OAS. This one is a bit more complicated. Remember, OAS is a social program that is simply based on how long you've lived in Canada, so you are not entitled to it in the same way that you are entitled to CPP, which you pay directly into. But like CPP, you can still collect it if you leave Canada, but there are some qualifiers, so let's go through them. To begin, you have to have spent at least 20 years in Canada after turning 18 in order to collect any OAS benefit outside of Canada. You only need 10 years of residency to collect OAS if you're living inside of Canada, but it's 20 if you're living outside of Canada. Now that said, there are a couple of potential workarounds for people who haven't quite hit that 20-year mark. One of them is if you've worked abroad for a Canadian employer. Now notice here that it says may. I love that word. It basically means I can't really count on what the rest of that sentence is saying because they may just be able to wiggle out of whatever it is they're saying. So if this situation applies to you, you may just want to contact Service Canada and get the details nailed down. The other workaround is if you've lived in another country that has a social security agreement with Canada. In these cases, you can actually get credit for those years to go towards that 20-year minimum. I'll post a link below to the CRA page where you can find out more about this, and I'll also post a link below to the page that lists the current countries that Canada has these agreements with. Right now, Canada has nearly 60 of them, so it's a pretty good list. Here is a fun fact though. If you do use years lived in another country to meet that 20-year requirement, those years will not count towards the amount that you will get for your OAS benefit. It's only the amount of years spent in Canada that count towards the amount that you will get each month. Aside from that though, retiring abroad will not affect the amount you will get as long as you hit that 20-year minimum. Whatever you would have received here, you will receive there. Again, if this situation applies to you, I'd highly recommend contacting Service Canada so that you know exactly what to expect. They got your details and they will be able to help you navigate this better than anyone else. Now, as many of you may know, Canadians that have a fairly low taxable income might also qualify for additional OAS benefits such as guaranteed income supplement, the allowance, and the allowance for the survivor. However, you have to be a resident of Canada to receive these. You have to be living here. So if you leave, you will not get these. End of story. I know many people never qualify for these additional benefits anyway, so this may not really matter to them, but for some people, this could be a really big deal. Now, maybe the cost of living where you're moving is so much lower that it offsets the loss of these benefits anyway, but regardless, this is definitely something to consider. Another piece of interesting info is that the OAS Clawback, officially known as the recovery tax, for those who make over a certain amount in a year, still applies if you live in another country, except for in some of the countries that have a tax treaty with Canada. Basically, what this means is that there are certain countries that you could move to and make as much money as you like after the age of 65 and never lose a nickel of your OAS benefit to the dreaded clawback. Now, the clawback as of July 2023 doesn't even start until you've made over $81,761 in net world income, and statistically, this doesn't actually happen to most people very often. But if you're hitting 65 and you're at the top of your game, then hey, this might be a decent reason to move into some new digs for a few years. Obviously, there's more to consider, but I'll post a link below to the CRA page that lists the treaties so you can figure out which country you are going to move to. Now, in order to collect OAS abroad, you are generally required to file an annual tax return reporting your worldwide income. So, if you want the benefit, you've got to let CRA know how much you're making and from everywhere you're making it. And as a non-resident senior who receives OAS, you must submit an old age security return of income form so that CRA can figure out if there needs to be any clawback. However, as mentioned earlier, if you live in a country that has a tax treaty with Canada, you may be able to bypass all of this. All in all, tax treaties are a pretty big deal. If you're moving to a country that doesn't have one with Canada, then you will always have to pay withholding tax on all your CPP and OAS benefits. And the default rate is 25%. But if there's a treaty, that can be dramatically reduced. The benefits are still considered taxable income, but the amount you have to prepay via the withholding tax can be minimized. The last detail that I want to mention is that your benefits can actually be paid by direct deposit into your bank account in the country you're living in and in its currency, which is sweet. And according to CRA, likely means a better exchange rate. So there's that bonus too. Now, it probably goes without saying, but I'm going to say it anyway. It is super important to do your own research on the country that you are eyeballing and the agreements and the treaties or lack of them that they have in place with Canada. I've listed a bunch of really helpful links on this and other very relevant CRA websites below if you want to dig deeper. And I also highly advise speaking with a cross-border tax accountant. Absolutely. This is just simply one of those areas you don't want to muck around in. Basically, retiring abroad can be awesome, obviously, but you need to plan it through carefully. You need to make sure you do it really well because mistakes in this area can be really, really expensive. However, if you change your mind and you decide that you're going to hang around the Great White North, then you are definitely going to want to check out this video because it tells you everything you need to know about CPP and OAS for those living here.